Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. New top sectors are on our screen for this week. In fact, there's 5 of them that Kevin Matras, the head of our Research Wizard division, is going to fill us in on. They do look like they're new leaders, so why are they important to identify?
Well, it's always important to identify the top sectors, the top groups, because roughly half of a stock's price performance can be attributed to the group that it's in. Now, by definition, a sector or an industry is simply nothing more than a group of like-minded stocks. So if you have the majority of your stocks going up, that would be considered a strong group. If you have the majority of your stocks going down, that would be considered a weak group. What's interesting is that I have done some testing and I have found that even getting into a mediocre stock in one of the best performing groups can oftentimes outperform one of the best stocks in a troubled group. Now, that doesn't mean that you can just indiscriminately buy anything in one of the top groups and hope to make money. Far from it. But it does underscore the power of being in one of the best groups.
Like-minded stocks. I've never heard them referred to that way before, but that's okay. So how are you defining the best sectors?
There are several ways that you can define the best groups or the best sectors. One of my favorites is to look at the percentage of stocks trading within 10% of the 52-week high. Now, I know a lot of people like to look at the percentage price change over, let's say, the last 12 weeks or the last 24 weeks, and that's fine, but in some sense, I believe it's not sensitive enough. A perfect example would be this. If you were to look at the oils and energy group last year, that group was ranked one of the top sectors over and over again. And you know, the oil sector made some spectacular advances, but it ultimately collapsed under its own weight. What's interesting is that even while that group was collapsing, it was continuously rated one of the top sectors over and over again. And the reason that is because the price run-up in the beginning part of the 12-week or 24-week period was so huge that even a spectacular decline got absolutely lost within the huge run-up that preceded it. So I think if you're looking at something a little bit more sensitive, like the percentage of stocks trading within 10% of the 52-week high, that's going to be reflective more quickly. Because if you do see stocks pull back from the high, you're going to see that show up in the rating. And I think, as I said earlier, it's imperative to identify what groups are the best, because since it's so important to the health and the performance of your stock, you need to know right away, quickly and accurately, which stocks are the best performing stocks and which groups are the best performing groups.
All right, speaking of that, do you care to share with us the new top 5 sectors?
Yeah, the top 5 sectors, based on the percentage of stocks trading within 10% of their 52-week high, are up here. Number 1 was retail wholesale. That came in with a rating of 14.23%. Construction was number 2, 8.24%. Then you got consumer discretionary at 7.95%. Finance, which was 7.92%, and then consumer staples was the 5th one at 7.61%. Now, I threw in a 6th sector as a bonus because there's a lot of people who are just kind of, they've made a decision to stay out of finance. Whether that's right or wrong, some people are just eschewing that group. So business services came in the 6th position at 7.32%. I should also note too that it's interesting that if you were to look at, you know, the previous years, usually these groups had to get a rating of 50% or more in order to make it as one of the top sectors. But I think that these low numbers are just a sign of the times. But also too, I want to mention that oils and energy, that is at the bottom of the list at 2.82%.
Quickly, couple of stocks. I think we only have time for a couple of stocks this time.
Here we go. Let me just read the list real quick. Let me tell you, you have PNRA Bread Company, that is in retail wholesale, Rollins Incorporated in construction, TIVO, which is consumer discretionary, Watson Wyatt Worldwide in finance, the Hershey Company, which is consumer staples, and lastly, ICFI, which is ICF International in business services.
All right. And do you own any of those?
No.
Okay. You can go over to Zacks.com's homepage and scroll down until you get to the headline of this commentary and find out more about these top 5 new sectors that Kevin has outlined for you. And you can go to Zacks.com/Research Wizard to find out more about the software tool that he uses to achieve all of these screens. With Kevin Matras, I'm Terry Ruffalo.